Good morning. It is Wednesday, April 1st. I'm your friendly local TikTok news anchor, JJ Hastings, and these are 5 stories you need to know to start your day. Let's jump in. In our first story, the global energy market is bracing for a massive supply shock this morning as oil production hits a 6-year low. If you've noticed that sudden jump at the pump this week, it's not just the conflict in Iran, but the data suggests it is about to get significantly worse. According to a Reuters supply survey released just hours ago, OPEC output plummeted by more than 7 billion barrels per day through the month of March. This isn't just a minor dip, but the lowest production level recorded since the height of the 2020 pandemic. Data from Bloomberg Energy shows that Iraq has been hit the hardest, with their exports slashed by more than 50% as regional instability grows. The root of the crisis is the ongoing maritime standoff in the Middle East, with the Strait of Hormuz effectively a no-go zone for international tankers. A fifth of the world's daily oil supply is currently trapped. For historical context, we have not seen a supply-side squeeze this aggressive since the 1970s. While the U.S. has increased domestic Permian Basin output, analysts at Goldman Sachs warn it won't be enough to offset the global deficit. What does this mean for you? Energy experts are forecasting a 15 to 20% increase in home heating and gasoline costs by the end of this month. We'll be watching the White House today to see if a strategic petroleum reserve release is on the table to blunt the impact. In our second story, the U.S. economy is running hot, but for the average consumer, that might actually be bad news. New data released this morning shows American manufacturing is growing at its fastest pace in years, but it's coming with a heavy price tag. The Institute for Supply Management released its March manufacturing PMI this morning, showing a jump to 52.7, significantly higher than what most Wall Street economists predicted. However, the prices index within that report skyrocketed to 78.3%. According to reporting from the Wall Street Journal, this is the highest level of factory gate inflation we've seen since post-COVID recovery began. But why is this happening now? Well, per the ISM's internal survey, nearly 40% of U.S. businesses are specifically citing the war in the Middle East as a primary driver of rising raw material costs. They are paying more for shipping and parts and then passing those costs directly to you. This overheating complicates things for the Federal Reserve. While the job market looks strong, high manufacturing costs usually lead to sticky inflation. The big takeaway here is that the interest rate cuts many expected this summer are now likely off the table. As long as manufacturing costs stay this high, the Fed will likely keep borrowing costs elevated to cool the economy down. In our third story, tensions in the South China Sea reached a dangerous new peak overnight as a territorial dispute between Manila and Beijing threatens to draw in global powers. According to official statements from the Philippine news agency, Manila has announced a formal plan to rename several disputed features in the South China Sea to assert its sovereign rights. It's an immediate and sharp response carried by CGTN. China's foreign ministry spokesperson Wang Ning stated that Beijing will take all necessary measures to safeguard what it calls its indisputable sovereignty over the Spratly Islands. This isn't just about names on a map. This region sees trillions of dollars in trade pass through every year. Under a 2016 ruling by the Permanent Court of Arbitration in The Hague, China's expansive claims were found to have no legal basis, a ruling Beijing has consistently ignored. The U.S. State Department issued a briefing this morning reminding all parties that the U.S.-Philippines Mutual Defense Treaty covers armed attacks on Philippine vessels anywhere in the South China Sea. We're now entering a wait-and-see period. If the Chinese Coast Guard attempts to physically block Philippine vessels from these newly renamed areas, we could see a direct military confrontation involving U.S. naval assets currently stationed in that region. Our next story, a developing international crisis is unfolding in Iraq this morning. The U.S. State Department has officially confirmed that a veteran American journalist has been kidnapped in Baghdad. Reporting from Politico confirms that Shelley Kittleson, a longtime Middle East correspondent, was seized from a street in the Iraqi capital late yesterday. According to a spokesperson for the Iraqi Interior Ministry, security footage shows several unidentified gunmen forcing her into a vehicle. While no group has claimed responsibility currently, intelligence officials speaking to Reuters suggest an Iranian-backed militia may be behind the abduction. Kittleson has spent years covering the complex of militia influence in Iraq and the ongoing regional conflict. Her kidnapping comes at a moment of extreme friction between Washington and Tehran. Historically, such abductions have been used as leverage in broader geopolitical negotiations. The Committee to Protect Journalists has called this a grave escalation in the dangers facing press in the region. Right now, the U.S. Embassy in Baghdad is in crisis mode. The big question for today is whether the U.S. will launch a recovery operation or seek a diplomatic channel. This situation adds a massive layer of instability to an already volatile Middle Eastern theater. As a fellow journalist, I want to send my deepest wishes and hopes to both Shelley Kittleson and her family that she is recovered quickly and safely. And in our final story this morning, a major cyber attack has effectively paralyzed one of North America's largest logistic firms, and that fallout could hit your doorstep within the next 48 hours. Straightline Logistics confirmed in a press release this morning that its internal booking and tracking systems have been compromised. According to cybersecurity monitors at DExpose, a notorious ransomware collective known as Everest has claimed responsibility for the breach. The group has reportedly threatened to release terabytes of sensitive shipping and client data unless a multi-million-dollar ransom is paid by the end of the business day. Straightline Logistics is a tier 1 freight forwarder. That means they handle anything from medical supplies to high-end electronics. Now, as reported by Wired, this attack follows a pattern of critical infrastructure targeting that we've seen increase since the start of the year. This specific firm is a linchpin in the last mile delivery chain for several major e-commerce platforms. If you're waiting on a package these next few days, expect delays. Experts are warning that even if the ransom is paid, the backlog in the tracking system could take a week or more to clear. Beyond delivery times, this is a major red flag for data privacy. If you've used a major shipping service recently, your information might be a part of this breach. We'll keep you uploaded and updated as that Everest deadline does approach. I've been JJ Hastings. These are 5 stories you need to know to start your day. What are you seeing in the news that interests you? Drop it below in a comment and I'll take a look. And as always, I'll see you in the next one.